Hello, welcome back to Learn Economy. And today we are going to see the efficiency and equity considerations of tax. What is a tax? When it comes to tax, we know that it has been a compulsory levy, isn't it? The government is collecting tax as a compulsory levy. And you cannot deny your responsibility of paying taxes. Taxation is a system that the government used to collect tax. And when it comes to taxes, you have to understand that tax can be of different types. Like it can be direct tax, it can be indirect tax. That is one way of looking at taxation. Then you can have tax like progressive tax, regressive tax, proportional tax, etc. Isn't it? So, as I told you, we can have different types of taxes. But why is the government collecting taxes? What is the purpose of collecting tax? This is mainly to increase the revenue of the government. Tax, it's a part of fiscal policy. So, through taxation, by increasing taxes, the government will be going for increase in its revenue. By levying an additional tax, government again would be increasing its revenue, isn't it? But it has got another part as well. The other part of the story tells why is the government taxing with respect to people and how is it influencing the people. Okay, yes, from the part of the government it will be increasing its revenue, but when it comes to the side of the public, how is it influencing the public? Whenever government introduces a new tax, it will be promoting some beneficial activities. That means how it is promoting beneficial activities, because the government revenue is increasing as a result of rise in tax. So with this revenue, the government will go for increase in expenditure. So when expenditure increases, that will lead to more activities, more investments, or more development types of activities in the economy. As a result, that will be creating employment, because production would be increasing as a result of this expenditure done by the government. With this, we can have a lot many benefits flow to people. Next, the government will be limiting undesirable behavior with tax. How is the government limit undesirable behavior with tax? Let's say that the government is taxing liquor. The government taxes liquor. It will be increasing the price of the liquor, isn't it? So whenever the price of the liquor increases as per law of demand, this will be reducing the consumption of liquor. The habitual consumers will be consuming liquor whatever be the price, because they are addicted to that. But the other people, the other section of people will be reducing their consumption of liquor just because the price of liquor has increased as a result of taxing liquor. Just to give you some idea related to taxation. Okay, so whatever it may be, whether it is promoting some beneficial activities in the economy, or whether it is uh, uh, discouraging some undesirable activities in the economy, with respect to taxpayers, they hate to pay tax. Always taxpayers consider tax as a burden. They always consider tax as a burden. Okay, so the government want to reduce this kind of thinking on taxpayers. The government wants taxpayers to consider taxes less burdensome, and that is why the government always considers in its mind that whenever it goes for a taxation, it has to attain at least two objectives, and this is, first is efficiency criteria and next is equity criteria. So whenever the government goes for a taxation, it should satisfy these two criteria: efficiency condition and equity condition. What is tax efficiency? First of all, whenever we deal with tax efficiency, what we are concerned about is minimization of cost. A tax with minimum cost is considered to be efficient. Okay. And what can be the different types of costs associated with tax? There can be something called administrative burden, the cost involved from the part of the administrative side. Consumers will be incurring a lot many costs, and it will be creating some distortions in the economy, and that too will be creating some cost for the public. So whenever we consider tax efficiency, our main motive is to reduce the cost, the different types of costs associated with tax. Let's see more about it. Here, government also deals with something called simplification of tax code. We know that whenever you go for direct tax or indirect tax, this is something familiar to those people who are paying income tax. So every year you might be paying income tax, and most of the people might not be able to understand what is being given in the guidelines of the income tax department. The income tax department, the department which deals with income tax, will be issuing guideline every year how to pay tax, who all are exempted, etc., etc. But common people might not be able to understand the jargons used there. They won't be able to understand the kind of the way in which certain phrases are put there. So what we usually do is that since we are not able to understand it properly, we will be approaching people like lawyers if we want any clarification related to legal part. Then we might approach tax consultant, etc. So whenever we approach lawyers or tax consultant, these people won't give their service to us for free. We have to pay a fee for them, and that is a cost. The fee that you pay to these people will act as cost, isn't it? It is an increase in cost that has come to you as a result of the complex tax code, the complex tax guidelines. So in order to reduce this cost, the government is going for simplifying the tax guidelines or simplification of tax code. Then, since the government always want to increase its tax, the government also tries to look at the other side. What is reduction of loopholes? Because there can be some loopholes in the tax guidelines that would be issued by the government. If government minimizes the loopholes in the tax code, that will be increasing taxes and that will increase the revenue of the government. That can again increase public expenditure, which will again lead to development. Okay. Then the next main motive of the government is to reduce debt weight loss. What is debt weight loss? Whenever the government goes for taxes, rise in tax means that will be reducing consumer surplus. That will be reducing produce a surplus? Why it is reducing consumer surplus? Because consumer has to pay a high price to the product because tax has increased. Again, how it is reducing the producer surplus? Producer will be getting a less price for the product. The rest would be taxed by the government. So that will be reducing consumer surplus and producer surplus. These both will lead to fall in production. Production will fall because why? Producer is producing commodities. More commodities, why are they producing? Anyway, they are getting less producer surplus. Again, why consumers go to purchase more commodity? Because even if they go for the consumption of more commodity, their consumer surplus is coming down. A rational consumer will not consume in that particular situation. Also, a rational producer will not produce in that particular situation. I'm not saying that they are stopping their production consumption. They will be consuming and they will be producing for their sustenance, but there would be a fall in production. Production will come down, and whenever production comes down, what happens? This will be creating problems for development. Isn't it? So whenever production comes down, this will be reducing the tax revenue for the government. How is it reducing the tax government revenue for the government? Because production has come down, so the government will not be able to impose a tax on the production, which is not happening. So that will reduce the tax revenue for the government as well. So altogether, when it comes to deadweight loss, it shows a total loss to the economy. Okay. So we could see that a deadweight loss is something that is very much attached to tax whenever it comes to a commodity tax. Although the cost of complying with the tax code does generate some deadweight losses, most deadweight losses are incurred by tax itself. Now, coming to another important objective with respect to tax policy, it doesn't want to distort any economic decisions. For example, we know that people work. Why do people go for working? Why do people go for their employment? People work because they get income. Isn't it? It is because of this people go and work. And you know something called income tax. And what is income tax? Income tax is a tax that is being paid based on your income. So whenever a rise in income tax, what here happens is that this will act as a discouragement. So this will discourage people to work. That means their work employment will be coming down. Okay. So whenever employment comes down, that will create problems for development. Again. So that is what you call it as a distortionary economic decision as a result of rising tax. What the government has done is that the government has just increased the income tax. So as a result of increase in income tax, people will think, why should I go and work more? For more hours, why should I work? Because even if I work for more hours, I'll be the income that I get as extra income will be taxed by the government. So why should I pay a huge amount to the government as a result of my effort? So people will have a general tendency to think like that, and this will be discouraging their working hours, that will be discouraging their work, and this will reduce production in the economy, which will ultimately lead to problems for development in the economy. Again, it's a bad impact. Also, the higher prices would reduce demand and lower prices would increase supply. Lower prices would decrease supply. We know that there exists an inverse relationship between price and quantity when it comes to demand, isn't it? So whenever there is a high price, you will demand less. Whenever there is a less price, you will demand more. If you compare points A and B, you can see that when you move down along the demand curve, you can see that your price is falling, right? As a result of your falling price, you are increasing your demand. So here, this means this much. As a result of this much falling price, your demand has increased this much. And what about supply? Again, here quantity, price. This is your supply. Supply, again, let's compare 2 points. C, D. So at C, at price, at this particular price, what you could sell is only this much quantity is being sold. Let it be Q1. Only Q1 quantity is sold at P1 price. If price increases to P2, quantity will also increase to Q2. So as a result of rise in price from P1 to P2, the quantity supplied is also increased. It has also increased from Q1 to Q2. That is what you can see here. A higher price will be reducing the demand. A higher price means if price increases from this point to this point, your quantity will be falling, isn't it? Price increase means quantity falls. Price fall means quantity rises. So there exists an inverse relation here. Inverse relation. What about here? A lower prices would decrease the supply. So this is a direct relation. Okay. Now, having discussed a lot about the tax efficiency criteria, let's consider the equity criteria for tax. Whenever we say the equity, especially taxation equity, what we mean here is we have to consider tax as a fair thing. Like the tax that is imposed by the government should follow the principle of fairness. That's it. Taxation equity is something related to the principle of fairness. Okay. So whenever we say fairness, it again has got several criteria. Just consider a situation that the government is imposing something called excise duty or excise tax, and this is being imposed on a particular product called gasoline. Okay, gasoline is the only one example that we have taken here, and we have to consider here the excise tax that the government has imposed on gasoline. And you know that gasoline is something that has been used to build roads, bridges, etc. It has got so many uses. Okay, so the government is taxing this particular commodity. But again, you have to remember that even though government is taxing gasoline, this is even though increasing the tax revenue of the government, this income is being used by the government on expenditure, isn't it? It will be increasing the expenditure as well. That too will be increasing. However, the tax on income and investment are based on something called ability to pay. So whenever we consider tax on public, we have to consider some aspect called ability to pay. Are the people of our nation able enough to pay tax? This is a question that the government should ask to itself. And this ability to pay is being classified into two. Ability to pay aspect can be looked from two angles. This is called vertical equity and this is called horizontal equity. Okay. And what is vertical equity? It is very simple. Vertical equity means that if people are having higher income, they are paying more tax. Vertical equity means if you have high income, you pay high tax, and if you have low income, you pay low tax. That is it. Moving to horizontal equity concept. Here, what it means is that if people have more important necessary expenses, they will be paying less tax. I'll explain it here. Let's suppose that we have two people, person A and person B. Okay. So both these people, person A as well as person B, are getting 2000 rupees. A is getting 2000 rupees and B is also getting 2000 rupees. Let's come to the background of A. A is having 6 children and B is having 2 children. Again, coming to the next criteria or next situational factor, A has got some illness. Okay, so this person has got some illness, has got some disease. But coming to B, he is not ill. He doesn't have any problematic illness. A is having some illness, he is not ill. So these two situations will show that this person is having 6 children and he is also ill. This person is only having 2 children and he is not ill. Based on these two situations, these two considerations, we can see that A has more expenditure compared to B. Compared, isn't it? If that is the case, as per horizontal equity, what horizontal equity says is that as per this, we can make A should pay less tax. Okay. B should pay more tax. Remember, both are having the same income, 2000 here, 2000 here. But as per the situational factors, since A is having more expenses, especially some necessary expenses, we have to go for something called horizontal equity, which will be making A to pay less tax and B to pay more tax, comparatively more tax. Okay, so deductions and tax credits available for people who have children, allowing them to pay less tax for a given level of income. That is it. Now, just consider two categories of people in our economy. So, people can be divided into wealthy, that means rich, and poor, isn't it? So, the wealthy people will have more money with them, and with this more money, they can consume so many goods. So, this would include not only essential goods and service, but also they can have some saving as well, isn't it? So, they will consume, they may save, they may invest, isn't it? But what about the poor people? Poor people might be getting some income which might be just sufficient enough for their consumption of some necessary needs and wants. At times they won't be able to save also. Sometimes they will be making some small savings, but at many times they won't be able to save also. Their income will be just sufficient enough to meet their necessary consumption needs and wants. Okay, so if that is the case, we have to consider these differences as well when you go for taxation, and that is what the government does. Okay, so that's all about today. You can like, share, and subscribe to this channel for more videos, and also you can join my Telegram channel as well as Telegram group to discuss your doubts. Links are provided in the description box. Thank you for watching.